Hey guys, good morning. Start of a new week. It is Monday, January 9th. It's about 8:30 here in Utah right now, so another late start. I'm going to try to get better with these things. As you will see, there is a change. The mustache is gone, so you'll be seeing a lot more of this face than the old one. That kind of look got played out. I had it for about 4 or 5 months, and time to change up. I'm going to flip the camera again just to show you guys this view. This is why Utah is amazing. So I mean, these mountains are just gorgeous. It's the same ones I had in the video from last week, but yeah, just a gorgeous view of those mountains. But let's get right into it. So here's what's going on with the markets. The Dow is up, the Nasdaq is up, the S&P is up. They're not skyrocketing, but about 120 points, 34 points. The market is definitely up across the board. The interesting one I'm going to bring to mind is gold. Gold is at 1882, at least it was when I checked just a couple minutes ago, the spot price. That is very high. That is highest it's been since 2020, mid-pandemic. So that is it is creeping up little by little. It's not skyrocketing, but progressively over the last couple weeks, couple months, it has been creeping up. That's a very interesting indicator because oftentimes gold is a reflection of a downturn in the economy. I'm still maintaining that recession isn't coming, at least not in the traditional way that people think. I think people are still too hawkish about the fact that there's a recession coming. If you see my previous videos, I've brought up reasons of why I don't think it's as predictable as people think, or perhaps that this recession is going to look very different than previous ones. But the fact that gold did hit 1882 is very interesting. So our industry does follow alloys, always has. So our industry has always kept an eye on gold, palladium, platinum prices. And the last time they went this high, it was right before the fall of 2008. Gold had hit a very high number. The crash happened in September of 2008, and gold kept climbing until it hit 2000. As the economy improved over the consecutive years, gold started dropping. It never went back to where it was pre-fall, but it definitely dropped. Then during the close down, the lockdown of 2020, gold skyrocketed again and eventually came back down. Now, what's interesting is, again, it came down to a more firm bottom. It didn't go back to the $1,300, $1,400 price. It's kind of stayed at the $1,500 price. Now it's steadily climbing again. So the big question is another fall imminent? Now, the fall doesn't have to be significant. It could just be a market correction. There's a lot of people arguing that the market hasn't fully corrected, that it's still overinflated. So maybe that's what gold is actually hindering to or predicting. It could be that there's nothing that's going to come. It could just be that gold is increasing in value just because oil is dropping. As a commodity, it might be increasing. It could be that gold is going to go down tomorrow and this little blip means absolutely nothing. But that is one I'm going to keep watching and keep bringing to your guys' attention, just because I think that's a very important indicator. In the past, that's been one of the indicators I've looked at in the economy, and that's very interesting. It's even contradicting my own theory that the recession isn't coming. That single number, that gold price, is making me second guess that. Another interesting point is Goldman just bought a large stake in Alibaba. It increased it, well, it didn't increase its position necessarily, but it has a strong position in it with predictions that Alibaba is going to go up 25%. That's a very important number because Alibaba is huge in global manufacturing, right? So the fact that Goldman is increasing that means they're pretty bullish on manufacturing in general. I would keep an eye on that. I think there is going to be a chance that global manufacturing is going to increase. So definitely keep an eye on that. In New York, some interesting things happening with the job market. So in New York hospitals right now, there's 7,100 nurses on strike across 2 hospitals. They're asking for higher wages, more time off. And that's, again, interesting to the inflation numbers and the job numbers. This is why I keep saying that the recession isn't coming, is because inflation is still just too high. If the market was really going down as substantially as all the newscasters on CNBC and Bloomberg and every other podcast on YouTube say, they couldn't safely do this. This isn't just a single sector, right? We've seen unionization across Starbucks. We've seen the railway strikes. So there is a lot of power in the workers right now, not in employers, which I'm not passing judgment. I'm not saying whether that's good or bad. I'm simply just making a point. I think that pays credence to the fact that the job market is very strong, and that's why a recession is very difficult. These nurses probably aren't going to get everything they ask for, but they're probably going to get something. And there's a good chance that other hospitals might join in. So this again pays credence to the fact that I think employees have a lot of power. They can get jobs very easily. They have a lot high wages, and I think those wages are going to continue to increase, fueling inflation, but I think also keeping us out of true recession. I know people say that that could lead to stagflation, and it very much could, but I don't see sectors of the economy going down as much as people predict. This is anecdotal evidence again, but I think anecdotal evidence is very powerful. I was at a steakhouse this weekend at Fleming's, celebrating our dad's birthday. The place was packed. And I was going out with my girlfriend. We were having trouble getting reservation at simple casual restaurants. Yes, it was a Friday night, but this is the kind of restaurant it was a melting pot, right? You just walk in, get a table. It's not that fancy. We were having trouble getting reservations for simple restaurants. It's very busy. The market is not slowing down like people are saying. An interesting one is I was talking to my cousin yesterday. He worked at Tesla up until last year when the layoffs happened. He always had a little side hustle that he did. He made good money, but after the layoff, he kind of doubled down on that little side hustle. And now it's become his permanent income. So he has not really been in the private job market since June of last year. His wife doesn't work. She's a stay-at-home mom. They have a 1-year-old, a 1.5-year-old right now, and then she's pregnant with another. And he's not seeking out another job because he's making good money. Now, the interesting thing is his little side hustle is in hospitality. So he is renting out pieces of recreational equipment, and he's making very good money off of it. So the recreational market is not going down either, so much so that he can just do this full time. Like I said, the economy is very strong. I will quote one negative aspect to the current environment. So this is kind of the opposing view to my theory that the economy is not going down. Housing was down substantially in many regions in 2022. So the most recent numbers, I have them here. I'm going to read them off. So the housing market is down in the following cities by the following amounts. San Francisco is down 14%. Seattle is down 13%. San Diego is down 8.5%. Denver is down 6.7%. Los Angeles is down 6.6%. Phoenix is down 5.9%. Dallas is down 5.6%. And Vegas is down 5.2%. This is from their peaks in April. So they're down significantly in those cities. However, those are very large cities, all with very large populations. Los Angeles, San Francisco, Seattle, and Dallas alone can skew any market. So I think this is what is happening, is that you have these large cities that have seen negative growth in housing because people are largely leaving those cities. I know Dallas is on the list. Dallas is a popular spot, but there's other cities in Texas, and Dallas is a blue city. A lot of people have complained about rules and regulations in blue cities. That could be the reason that people are leaving. It could also be that Dallas became overinflated. And then when the economy started taking a slight dip with interest rates, it was the first one to feel it. So I think that these very large cities are getting a slight drop and they're affecting the overall market, but I don't think that reflects the overall market. Once again, our housing prices here in Utah have not dropped. In many regions across the U.S., I'm not seeing a drop. I have family that lives in New York. Interestingly, again, New York is not on that list. So a lot of people like to bash New York, say it's on the downslope. New York is still very much on the map. Housing prices are not going down. I have cousins that are renting their apartments for much higher than they were pre-COVID. So the housing market is still not going down despite the fact that interest rates are rising. That's kind of it for today. I'm going to kind of jump into it and get back to work. Thank you guys for listening. I will be back tomorrow and we'll discuss new subjects and new news stories and see what the market has in store. I hope you guys have an awesome week. I hope you guys have a very productive week, and we will talk soon. Thanks.